Well, it feels like it's been a while since I've talked about the economy, but here we are again. The Federal Reserve has decided to cut rates yet another time. Yet again by 25 basis points, and for those of you who are not, pretentious nerds like me, 25 basis points is 1/4%. Old Jay Powell came out yesterday and did exactly what everyone has been expecting him to do since the last time he cut rates. And that is cut rates for a third time in a row, which, historically doesn't bode well for the economy when the Fed, cuts rates 3 times in a row like this. It tends to be in the lead up to a recession. One would think, given the history of, Fed rate cuts and when the Fed decides to cut, it would be, quite bearish for, stocks and the U.S. economy, when you see the Fed acting like this, where they're constantly cutting and starting up a whole other procedures that, are not tied to directly to interest rate policy that I'll get into. But first, let's go over what Powell said, because to me, the big line that came out of Powell's press conference yesterday was when he was asked by a reporter if, hey, Chairman Powell, you tried to raise rates before and then you stopped pretty early, like at 2.25%, which is ridiculously low interest rate still, and you decided that we couldn't raise rates anymore. If you couldn't raise rates then, when will you raise rates again? When do you see interest rates rising in the United States? And Powell said that the only thing that could ever get him, of all people, to raise rates would be if there was significant inflation observed by the Fed, and then, Powell would respond by raising rates then to try and rein in inflation. And Powell, has always been considered, a so-called Fed hawk, meaning that, he was not quite as loose with his monetary policy as, someone like, say, Neil Kashkari of Minnesota, who has been, who wants to cut all the time, or like James Bullard. But to me, Powell sounds like an ultra dove to me. Because by his standard, by saying that the Fed would have to observe significantly high inflation to warrant ever raising rates again, is a nice way of saying we are never going to raise rates again, ever. Because the way that the Fed measures inflation, they're never going to observe significant inflation. The way that, monetary policy affects prices in the real economy is not uniform. And so therefore, the way that the Fed tries to measure these things through, consumer prices is not capturing, the real rate of inflation across the economy if you averaged everything. It's, the Fed is only measuring the inflation of certain goods. And then also, the Fed has a way of trying to downplay the price increases of those goods by trying to factor in improvements in quality of those goods. So like every year, how an iPhone is now like $1,200. The Fed will look at, that new iPhone and say, well, how much better is it than the old iPhone? And then they'll try and subtract whatever they think the increase in value of this new iPhone over the old iPhone is from the price increase. And so quite often, the Fed will take, an increase in price of some good and actually say, well, no, the price dropped because the value of that good increased more than the price. Which is, of course, totally preposterous because value is a subjective concept, and the Fed is essentially making stuff up when they do these sorts of accounting tricks to try and make it look like the price of goods are not rising. Nobody ever talks about that. If the Fed didn't do all of this, it's kind of like seasonal adjustment, but, way more corrupt. If they didn't adjust for, changes in quality as they see it, which is, totally subjective, then, prices, even by the prices that the Fed is measuring, they would be, going up a lot more than they are now. But even still, the prices that the Fed looks at are not where the inflation is concentrated. Obviously, anyone who has studied the U.S. economy over the last 10 or 20 years realizes that the Fed cutting interest rates is not inflating the overall economy. All they're doing is, creating a credit bubble, because how does the Fed inject all this, new money that they create into the economy? Well, it's by lowering interest rates. So where does all that money go? Well, it goes into banks. What do banks do with the money? Well, they loan it out. Who do they loan it out to? They loan it out to corporations that buy back their stock, and essentially a lot of this money makes its way into the stock market. It goes into, things like housing and real estate. And so what you get is essentially asset price inflation. You're not really getting goods inflation, because the price of assets are rising, and all those people who own those assets are, a relatively small community of people. So all those folks, even though they're worth a lot more money now, they're kind of the top 1% folks. So if they have a lot more money, you're not going to see that increase in demand reflected in the price of bread. You're going to see that reflected in the price of yachts. The reason why consumer goods prices really aren't rising that much is because, consumers really don't have that much more money to spend. And so what Jay Powell is saying here is that really this asset price inflation party will continue to go on in perpetuity. And, if you're a rich guy that owns, a few $1 million in stocks, well, then I'm going to make sure that your life stays very comfortable. Even if that means that I completely, screw individual savers, relatively poor people who try and save their money and try and build up some wealth without, throwing their money, into a stock market that they don't understand. If you're someone who, invests in fixed income stuff like bonds or whatever, like U.S. Treasuries, you're making a negative real yield. You can't make any money. It's impossible for ordinary people, for the most part, who are not, pretty well read in terms of, modern finance, to make any money saving their dollars. And that's exactly what the Fed likes. The Fed wants people to spend all of their income because in the short term, that increases, the gross domestic product. Because if everyone spends all their money, well then, oh, look at all this consumption. The economy is booming. Well, no, it's just that nobody knows what to do with their money. And they know that if they save it, they're just going to end up losing money because the interest rate's so low that the prices of goods are rising faster, than they can make money in interest. And so the result is then that you have people who have no savings, who cannot, pay for an unexpected, $2,000 bill, like let's say their air conditioner breaks or something. They have no money to pay for that. And you also have, a huge contingent of people who just don't have enough money to retire. And frankly, I think retirement is a thing of the past anyway, because I think that retirement as we know it in this country is only possible because of, Fed asset price inflation. But even still, if the Fed wasn't doing all this, people should still be able to save something for retirement. They should be able to, put some money away and stop working eventually, just because, they've able to, save a portion of their paycheck every week. And because, goods in a normal capitalist economy, as, production becomes more efficient, should become cheaper. So all that money that you have stored away, in your bank account or in your sock or whatever, should be worth more money. That's how things worked in the 19th century. In the 19th century in America, before we had the Fed, prices fell year over year for years during the Industrial Revolution because products were being manufactured more efficiently. And, so your money went further. Less dollars were able to buy more goods. The exact opposite of what we've seen, over the last 100 years in America, where, 1 penny in 1914 is worth more than $1 today. So all in all, Powell made it quite clear that the Fed will continue, as they always have, to make the world safe for banking and make it very dangerous for ordinary Americans. They will continue in perpetuity to screw all of us for the sake of themselves and their rich friends. So if you gained anything of value out of this video, I'd appreciate you clicking that like button and sharing this video. And if you haven't already, please do hit that subscribe button because I do upload every day and I'd hate to have you miss one. So I'll see you folks back here tomorrow.